Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES tested the 37.5 to 39.5 zone from Friday, and that was the area that ended up shutting off the selling in the overnight session and resulting in a reversal back up towards the upper edge of Friday's range. So at this point, heading into the open, we'll be keeping an eye on 51.5 to 53 and 46.75 to 48.75. Buyers can maintain control above the initial support zone of 46.75 to 48.75, and holding above 51.5 to 53 would just be a confirmation that we are seeing a decent amount of buy-side strength, which can bring the 59 to 61 zone into play. And at this point, even though sellers can be active on first test at 59 to 61, the zone definitely calls for caution on the short side, because as we head into it, the buyers will be more dominant and in firm control, and that can result in a upside breakout and a test of 65.5 to 67.5, potentially even higher. The next major inflection point above 59 to 61 is 73 to 75. So even though we can get some rotation at 65.5 to 67.5, or even at the gap fill at 70.25, those are not major resistance areas. So even though we can get some short-term rotation, eventually the market can still make it to 73 to 75 if we get a strong break above 59 to 61. It's just that on the day time frame, the range could be exhausted, so we may not reach 73 to 75, but that is the next major inflection point in the event that ES breaks out above 59 to 61. Now on the downside, that 46.75 to 48.75 area is very key, and if we fail and we break below it, that would signal a failed overnight breakout, which would bring a possibility of a pullback quite easily down to 37 to 39 and potentially even 29 to 31. So 37 to 39 is a pretty key zone, and buyers can be active there on first test, but we just have to keep in mind that break below the initial support zone, 46.75 to 48.75, would signal short-term weakness. It would be a failed breakout, and as the market heads lower into 37 to 39, the sellers would be more dominant on the smaller time frame. It doesn't mean that buyers can't be active at 37 to 39 or at the prior VPOC of 36, but because the sell side would be more dominant, it just means that we have to be a bit more careful with trade location and timing if we are going to fade that move. And below that 29 to 31 is the current balance area low. It's a bigger picture support area, so that's a zone that buyers can certainly still defend on first test. But that downside scenario is the secondary scenario. The primary scenario that's in play right now is the upside move. So above 51.5 to 53, above 46.75 to 48.75, the focus is going to be more on the long side, and we'll be cautious on short setups. The only reason to get short at this point would be if the market signaled very clearly that this was turning into a failed upside move. So if there was a big disconnect on the advanced decline, or there simply was not any upside momentum and tick was holding below zero, situations like that certainly would call for caution. But for now, heading into the open, the buyers are in firm control, and the expectation is that ES is going to go up and test at the very minimum 59 to 61. And if we continue seeing strength on the Russell, if let's say Russell actually makes a new all-time high today, then 59 to 61 doesn't have to hold, and we can actually break out and head even higher. So that's the primary scenario that's going to be in play. But if we start seeing failures, if we start seeing weakness, then of course we have to adapt and adjust. But the buyers are in firm control above 51.5 to 53 and can maintain that control even above 46.75 to 48.75. So that's the scenario that's in play right now. Let's see if the buy side can maintain control off the open, and we'll take it from there.